What type of trend are we in? So are we in an uptrend?
We're in a low trend.
Or are we in a downtrend? So number one, we looking for a trend. So are we in an uptrend? The market's going up. Or are we looking for a downtrend? The market's going down. So uptrend, downtrend. So based off this structure right here, what type of trend are we currently in right now?
Uptrend.
We're in an uptrend. Now, in terms of our structure in a uptrend, what are our structure points in the uptrend?
Higher highs and higher lows.
Yep, perfect. So based off how this is forming, all right, so yeah, how this is forming, we have higher low right here. So this is,
Keviron, what was that? What was the initial question you asked? What to do when we're what at the market?
so when we scale out to the higher time frames like the daily or the weekly, what is the first thing that we look for? Or what is the first thing that we want to identify? And that's our trend.
You want to look at the trend lines?
What type of trend are we currently in? Are we in an uptrend or are we in a downtrend? Once you identify that, what are our structure points in the uptrend? We have higher highs, higher lows. So once we identify our points in structure, this is a higher low point. This is a higher high. Go like this. Higher high, higher low, higher high. Wait a minute. Higher high, higher low. This was this higher high right here. This is higher low, and this is a new higher high. So let me color coordinate this. Let's make this blue. We'll make your higher high points, let's say red, bright red, blue, boom, red, blue, red. So this is our higher low. This is our higher high. This is our higher low. This is our higher high. This is our higher low. This is our higher high. Make sense?
Mm-hmm.
All right. So whenever we're at a higher low point, what could we be looking for the markets to do from a higher low point?
From a higher low point.
From a higher low point, what could we anticipate the market conditions to do?
The buyers.
Yep, we'd be looking for buys, right?
Mm.
And from a higher high point, what could we be looking for the markets to do?
Go into a downtrend because of sellers.
Go down. Yep, looking for sellers. And from this higher low point, what could we be looking to do?
Go back into an uptrend because of buyers.
Yep.
Mhm.
So we was from a higher low point. What could we look to do in terms of executions?
Buy. You could take profit.
Yeah, if we were currently in buys, but let's say we wasn't in buys and we was looking for sales. So what could we look to do from a higher high point?
So,
Yep.
Keviron, stop laughing at us.
I'm like,
Okay, higher high. Because I'm trying to imagine that, right? So I'm trying to imagine right now that last blue arrow you just put up. Let's say those lines after it aren't there. Are you saying when we're seeing it can consistently go up, we should now be thinking about selling?
Yep. As soon
Okay.
as we get interactions somewhere up here in this area,
Mm-hmm.
this is a seller zone.
Mm,
That's where we could be looking for potential sales. If we
okay.
were down here, right, let's say price came all the way back down here, that is a buyer zone or demand zone,
Mm,
or where we
okay.
potentially could see buyers step into the markets.
so
Makes
you're
sense.
saying when it goes down, that's when buyers come into the market.
Mm-hmm. Once it interacts with your last higher low point, if you look at this area right here, technically that wouldn't be considered a higher low point. Hold on, let me do it like this. So technically in this yellow zone or yellow box, that wouldn't be considered a higher low point because it didn't really pull back like that. How we can look at pullbacks is the further that it expands, the more momentum that will be created. So the more momentum that is created, the more it can go to that next level, or the more momentum that it will build to go to that next level. So our last level was 2,400, right?
Mhm.
So once price came back here, May 2nd, and pushed up here, our next highest point was 2,433. So what we potentially could see price do in this moment in time, potentially, is come back down and testing out this level of support or our floor.
Mm.
Keeping it simple, we want to buy from levels of support and we want to sell from where?
The ceiling, levels of resistance.
Levels of resistance, exactly. So we want to buy from,
The floor.
The floor.
Mhm.
and we want to sell from,
The ceiling.
one more
Resistance.
time, we want to buy from,
The floor.
The support floor.
yep, and we want to sell from.
The resistance ceiling.
So if you buying up here at a ceiling, is that wrong?
Yes.
Is the approach wrong?
Mm-hmm.
That's very wrong.
Yeah.
You could be losing some money. And if you're selling from your floor,
You're missing out on money.
that's wrong as well. You're trading in the wrong direction.
Mm.
Because from our floors, we
Mhm.
look to
Buy.
buy. In our ceilings, we look to
Sell.
sell. Precisely. And y'all got it.
Nice, nice.
So let's do some more examples. All right, so based off this trend, currently what type of trend are we in?
Uptrend.
Uptrend.
And why are we currently in the uptrend? What is being formed to solidify an uptrend?
Buying.
Yeah, we know buyers, yeah, but what is our structure?
The white, did you say the,
Higher highs and lower low or and higher lows.
Yep.
Okay.
So let's do this together. So this would be considered our
floor?
Floor.
floor. Perfect. This would be considered a
Ceiling?
Higher high
Okay.
point.
yep, higher high. This would be considered
Lower or higher low
Mhm.
point.
hold up. Hold on, Mr. Son. So it came back down here, tested out the what?
The floor.
The floor. Could it break that floor?
It did. It
It
went
did?
past.
Did it break this floor?
No.
So
Okay, so where your mouse go over to the left, to the black line,
to the black line. This right
right
here.
there, yeah. So are we looking at that, or are we looking at the lines that look like
We're
that
looking
line?
at the wicks.
The
Oh,
wicks?
let me zoom in a little bit more. There we go.
So the wicks are those little skinny lines coming out of the box.
Mm-hmm. And you know what those wicks represent?
So
Rejections. Who is being rejected to push lower?
the
People with not enough money in their account.
Is it buyers or sellers?
buyer, the seller, I mean.
Yep.
So where your line was, and how was that not going past the floor then? If you're saying that I'm looking at the,
Because if it went past the floor, we'll see price continue to do
go
this.
down.
Yep.
Mm.
We'll continue to see price do that. But it didn't do that.
Oh, okay, so you have to see a trend of it going down. Just because that line, the wick is going past the blue line does not mean that it's still,
It's been broken.
it's broken. Okay.
Only way that's broken is if we saw it close below this line, meaning this white, another white candle. If we saw one of those close beyond that line, then that would be considered a break.
Okay.
However, all we saw was a wick. It attempted to break below that line, right?
Mm-hmm.
But as soon as it touched it, what happened?
It went back up.
It went back up. And guess who was there? Who was present at
The
that
buyer.
point in time? Buyers were present. And
Hmm.
guess what we could have been looking to do from this level?
Buy.
We could have been looking to buy. Yeah, exactly. Y'all getting it. All right. So after that, this was that retest. What would this be considered?
A lower high.
This red line right here.
That's
Higher high.
You said a higher, who said a higher high?
I did. Higher high.
Yep. And why was that considered a higher high?
Well, to be honest with you, it just looks higher. That's why I said it's
Then
higher
this
than
high,
that.
right?
Yeah.
Yep. Exactly. Correct. Now, what would this be considered?
a low.
Higher low.
Higher low? Yep. And you see how this ceiling, previously this was a ceiling, right?
Mm-hmm.
Now when
Say
we
that again.
I said previously this was a ceiling, right?
Yeah.
Because of this price action here. of this high. However, when we came back down, was price able to break that level?
I don't
Yeah.
know.
Yes, based off that blue line.
Was it able to break this level?
Yeah, because it went below.
Right here?
Mm-hmm.
But once it went below that level, what happened?
It went back up.
So would that be considered a break?
Yes.
Yes.
Nope.
No?
Mm-mm. That would be
Help us, Keviron.
I
that
feel like
would
we're
be
doing darts.
that would be considered an overlap.
All right, now
That's
that's a
what
new word. You didn't tell us about that. What's an
I got
overlap,
you.
Keviron?
So I got y'all. So a break, remember, a break is it attempted to break, right?
Mm-hmm.
And then once buyers came back in, that would be considered a retest. Then from a retest, we'll be looking for a new lower low point. But it didn't do that. Right? It continued to push up. And
Okay.
to clear this up, go to the weekly. Y'all see that?
Mm-hmm.
Never broke.
Oh, wow. Okay.
It had a wick, right?
Mm-hmm.
It attempted to break, but sellers no longer had any strength to continue pushing lower. So whenever you see that, I need y'all, make sure y'all are aware, right? Yeah,
Mm-hmm.
you see this candle close like that. Oh yeah, it look nice. It potentially could push lower. But what we want to identify is how that next candle close. All right. That next candle close with a nice wick rejection. So when sellers were in control from this level. What is this right here, y'all?
A higher low.
Support? Resistance?
Which one, the white or the black?
This combination black and white?
Oh, support.
Mm-hmm. So look what it tested. It tapped it, boom. Then what happened?
Support. Went
Yep,
back up.
yep, created support. And then that following candle, what happened?
It went
More
down.
support.
More support. So if you're seeing this, right, what could that be telling you based off how these candles are forming?
Buyers are taking over.
Yes, ma'am.
Oh, whew. Not gonna
Look
lie, that was just a guess.
at So buyers are taking over. So just go over this concept real quick. Gaps, overlaps, and touches. This applies for supply and demand, or support and resistance.
So you said gaps, overlaps, and touches is support and resistance.
Mm-hmm. So you can apply this concept with support and resistance. So this would be considered support. And this is a gap. And this is considered a gap because price never came back and touched this level. You see that gap?
Yeah. Mm-hmm.
Mm-hmm.
So we'll see situations like that where it was pushing towards this level of support,
Mm-hmm.
but it never came and interacted with it. Buyers were in this whole range right here. That was support right there. So in some cases, we're going to see the markets do that. Create gaps from levels of support or resistance. It can be the same scenario. Like this could be considered a gap.
And you said when you see things like that, the gaps in there, that's just support and resistance.
Mm-hmm.
Okay.
So yeah, this was support. This is resistance. Y'all got that?
Mm-hmm.
Okay. All right. So that was a gap. This is a touch. So in some cases, we can see the markets do this, right? It can interact with the level of support, touch that level of support, and maintain it, then continue to push higher. Something like this. This would be considered a touch. Now,
So
see,
when you get touched, do you do anything or you just monitor?
oh, you looking for buys.
Looking for, okay.
Yeah, you looking for buys. As soon as we approach this level, oh yeah, that's we're looking for buy opportunities.
Okay, perfect.
All right, y'all got that?
Yes.
So that's a touch.
Mm-hmm.
And this will be considered an overlap. All right. So you see right here, this was support.
Mm-hmm.
And then we saw sellers break below that level of support. Right after we see buyers came back in, push price back up, came back down, retest, and then we continue bullish. Higher high, higher low, higher high. So whenever we see an example like that, that will be considered a overlap.
And when it's, let me ask you this, when the sellers break below the point, are they losing money?
When sellers break below this point,
Mm-hmm. Because
no,
they're going past the floor?
no, they gaining money. Sellers, they if people are selling, let's say they selling from here,
Mm-hmm.
and it goes down below this floor, then they're making more money than what they would be making if they was to take profit here. So if price went further below this line,
Mm-hmm.
basically making way more money than what they'd be making right here. That makes sense.
Nope.
All right.
Because I guess where it doesn't, because I thought you said, I know that when it's low, that you are to buy. However, I thought you said that when it goes past that line, you're losing money, like you're in a negative, I thought.
If you're buying,
Oh, if you're buying, okay.
but if you're selling, and it pushed below this level of support, then you're winning money. Or
Gotcha.
you're gaining more money. That's like this example right here, right? You see buyers was able to go straight through that level, right?
Yeah.
Boom. And guess what would that be considered? A overlap. So we were anticipating sales to come in right here from this level, right?
Mm-hmm.
What did it do? It broke above that level's of resistance. So if you were in buys, so let's say you got in right here, right?
Mm-hmm.
And you took it from here to here. That's 107, 109 pips. But let's say you held it and it broke beyond this level of resistance, right?
Mm-hmm.
Now you'll be up 147 pips. So instead of securing 108 pips, which is perfectly fine, that's amazing, right? Instead of securing 108 pips, you would have secured 148 to 155. So if you had a 0.01, that equals 10 cent a pip, right?
Got you. Okay.
Mm-hmm.
So we would have secured 109 pips. That would have been $110.90.
Because when it hits that ceiling, you're selling.
Yep, you could be anticipating sellers into the markets.
Okay. Okay. Then.
But if it broke beyond this level, right? Let's say you held this from here to here, right?
Mm-hmm.
Now, let's say you executed at 0.01, that's equals 10 cent, right?
Mm-hmm.
You gain 156 pips. So all you do is 0.10 times 156, and that equals like $15 and like 60-ish cent. So instead of gaining $10, you just gain $15.
Okay, I'm slowly but getting there. Okay.
And we haven't gone over lot sizes yet. That's like down the line. But just to make it make sense,
Yeah.
I wanted to give you an example. Let's say you did 0.10, that equals $1 per pip. So same example, you went from here to here. 1 times 110, how much is that?
What was the equation again?
The equation.
I can't deal with
Oh.
that.
1 times 110.
Now that I hear that we're timesing it by 1, that's even more embarrassing.
What's 1 times 110?
110.
It's 110.
110. That's horrible. Vanessa, I'm so sorry we are representing you like this.
Girl,
What's
you are
the
fine.
equation?
It's okay.
So you would have gained $110 if you took it from here to here. Now let's say we were still in those buys, right? And we took it from here to here. How much will we have gained? 157 times 1.
157.
$157. So instead of gaining $110, we will have gained $157.
Hmm.
Let me give y'all another example. This is the last one.
Even though we went past the ceiling.
Yep.
That's beginning when you go past, I think, I believe.
Yeah, you're gaining more. So the further
Okay.
that price goes up, the more money you're making if you are buying.
Checking out.
The further price goes up, the more money that you will be earning if you are buying. Now, if you're selling, then you'll be losing some money.
If it goes past the 7.
If it go, even if, let's say you sold from down here, right? Which you should not be selling from this point. That's crazy. You should not be selling from this point. If you're selling from this point and price continues to go up, now you're down. Let's say you had a 0.10 that equals $1 per pip. From this one candle alone, that's $48 that you're down. If you're selling, let's say it continues to go up, right? Now you're down $108. Let's say it started to pull back a little bit more, right? Now you're down $145. You're like, oh God, man, what am I doing? But guess what? Guess what happened right here? Guess what happened right here? You had an overlap. Let's say you sold right here, right? Sells. You sold from right here. Oh man, it went against us. 43. About 43, 50 pips. That's none. 0.10, 0.01, 10 cent. You're down $3 to $5. So you're risking $3 to $5 to gain $20, $22 on a 0.01. 0.10 from here to here, that's $221. All right, so why would this be considered an overlap, right? So from this level, what happened in the past? What's this black candle right here? What does that represent?
Buyer.
Support.
Yep, buyers. And then this white candle will represent what?
Seller.
Sellers.
So right after this candle formed, what did we continue to see?
Downtrend.
Downtrend. So this gives us the opportunity to create resistance, right? So let's say this happened and we're looking for more entry opportunities once price came here. So based off this candle, that will be considered a overlap because this candle closed beyond this level of resistance.
Okay.
Same thing like down here. It closed beyond this level of support. If we look at it from a trend line perspective, it closed beyond this level of resistance, right? And then what happened?
Then it went down.
Then it went down. So even though sellers wasn't present at that specific point in time, they were present right here. All right. This whole area would be considered resistance. Sometimes though, buyers or sellers, depending on the side of, from the side of the spectrum that you're on, from a level of support or a level of resistance, sometimes price overlaps those levels, right? These will be called liquidity grabs. Today, we was trading gold, right? We was looking for sells. But guess what? Sellers broke beyond. Sellers broke beyond this level right here. But guess what? We're still anticipating to happen.
Where to go down?
Yep. Potentially. Because right here, you got resistance. And right here, you have resistance as well. So anytime we see price do this, right, break beyond this level of resistance, this could be considered a potential, not saying that it is, but potentially it can be considered an overlap. Somewhere in this area, we should see sellers come into the markets to push price down, potentially. Not saying that it's going to happen or that's what it needs to do, but potentially that's what it can do. And as traders, our objective is to be able to identify that and plan accordingly. If it does that, let's say, comes back to those levels, or even, if we're looking at that example on EU, let's say it came back to this level and potentially could maintain this level. Let's say our entry was somewhere down here, right? We want to just execute and just jump headfirst into the waters. Because the market conditions, it literally can do anything it want to do, right? It can break this level of resistance, give you a pullback, and continue to go up. It could do that. We don't know that. We don't know if it can come back down, right? After it finds resistance. However, our objective, whenever it does interact with these levels that we have predetermined, those points of interest, as it interact with those levels, all our objective is to do is risk accordingly.
So when you say that, that means to sell?
We could sell, right? Because keeping it simple, we buy low, sell high. So from this example, we could look to sell. But guess what? Let's say we had $1,000 account. We wouldn't fully put in a 0.10. That's $1 per pip because it easily can go against us, right? It could go back all the way back up here if it wanted to. We don't know that. And if it does, right, we want to account for that loss. If it does go against us, let's say this range 83 pips, that means we'll be down $83.
But somewhere in between there, that's where you put your stop loss so you don't lose all of that.
Correct. If you was to execute a 0.10. But what I'm saying is, whenever we enter the market conditions, we want to make sure that we utilize proper risk management, right? We want to risk accordingly. We're not looking to just jump headfirst into the markets. Instead of doing that, you might put, let's say, half of that, 0.10. Or you might put a 0.01, whatever makes you feel comfortable. Let's say the market went against you 83 pips, went above this area. You'll only be down $9 to $10. Right? Let's say you put a 0.05, that's 50 cents per pip. Market went against you 90 to 100 pips. That's $50 max. If the market went against you 100 pips, you'd have lost $50. So whatever you're willing to risk, you control that. You control that, not the markets. You do. You determine that. But whenever we do test out these levels of resistance or support, right? Support, we can control how much we're willing to risk. We don't know how much we can gain, right? I mean, we have an idea, but it's not guaranteed that the markets is going to go into our direction. We can have an idea, but we can identify how much we're willing to risk before the trade even plays out. You control that. So we get an overlap. Let's say this is up right here. You sold from, let's say, it's 1.08526. That was your entry for sales. And the market went against you, let's say went all the way to 1.08816. If you didn't over leverage, you shouldn't feel any type of emotions. You have your stop loss in place, and you have your target of where you potentially can look to take profits off the table, right? If we're selling, we want to be able to predetermine areas of support, because from levels of support, we could anticipate who to come in.
Buyers.
Buyers. So this is a level of support of where we could look to take profit. This is a level of support. And this is a level of support. So let me zoom in for y'all a little bit. So this was our level of support, right? Our first level of support if we were selling from up here. Based off this candle, we saw a lot of momentum came in. Price broke straight through that. So TP1 was hit. Take profit 2. This was a level of support. What happened? Price broke straight through that as well. Take profit 2 hit. TP3. This is another level of support, or previously were buyers, right? Buyers came in, pushed price back up. What happened when price came to this point? Buyers momentarily came in, attempted to push price up. But what happened?
Sellers came in.
It found what? Resistance, right?
Resistance.
And then push back down. So in this example right here, TP1 was hit, TP2 was hit, TP3 was hit. And that's how you're able to identify areas of where you can look to take profit. If you're selling, you want to identify levels of support to take profit. If you're buying, you want to identify areas of resistance to take profit. So another example, right? Let's say you was buying from down here, right? This could have been TP1. This is maximum take profit right here. So to make sure that we secure our profits that the market gives us, right? We want to already identify these areas. From this whole range, this is where it goes. This is where we account for that first step, approaching the market conditions. What is our trend, right? And what is our market structure? So those are the two important things that we want to identify before we are even looking to execute any trades. So we're looking at this, right? This trend. What type of trend is this?
On where your mouse is on a black or just the whole thing? It's going down.
It's a
downtrend.
downtrend, right? So in a downtrend structure, what is our structure points?
Lower highs and lower lows.
Lower high, lower highs, lower lows. So this was a lower high, right? This was a lower low. This was a lower high. This was a lower low. So let's say we was trading from here to here, right? None of this existed yet. It was just this and this, right? Now, once price comes back up, right? Once it comes back up here, right? What is this?
Yes. Ceiling.
You're selling, but in structure, what is this? Your last,
High.
nope, I just said it.
Lower high point.
Your last lower high point. So from our lower high points, what could we look to do?
Sell.
We could look to sell. And it's that simple. In a downtrend, all we want to do is identify our structure. Lower highs, lower low. Lower high, lower low. From this point, we trade from our lower high point to our lower low. Until this is broken, we're still anticipating sales. Until this is broken, right? We still haven't gotten a new lower low point until it breaks this point and does this.
And once it does that, then you have to find, you start back over to find.
Where's your lower high? Where's your lower low? This was our lower high. This was our lower low. From here, this is a level of resistance. We could look to sell from this point. However, that is minor, right? If price breaks this level, no big deal. It's okay. It can do that, right? But if it breaks this level, oh God, we need to be very vigilant, right? Because this is like your house. This is basically like somebody going underneath your house and busting down all the pillars. Now your whole foundation is off. It went tumbling. You don't have no house. So we look, let's say we do this from here to here. We see price still hasn't been able to break this level yet. Sellers are fighting for their life. Sellers. 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 Y'all see that?
Yes.
What would this be considered right here?
Overlap.
A potential overlap. Yep. All we want to see now is if price can maintain that level. If it maintains that level, guess where we going?
Downtrend.
Down, we going down. We are going down. And we want to make it that simple.